Hello everybody, welcome to this market report. My name is Christian Charlo. Today folks, I want to make a follow-up on the last market report when we had the FOMC announcement that created a rally on the market. It happened on March 18, we were around this area here. So since then, the rally in the stock market has not lasted. It was short-lived. Right now, we're back at the same points that we were before the FOMC announcement. So due to that, most of the stocks that I've shown you in the last market report, most of them are either in a phase where they're starting a neutral formation, and we believe that as long as the SPY remains within that sideways formation, which is bounded by this support at 204 and this resistance at 206, then as long as we remain within this sideways formation, there's definitely nothing to be done for swing trading. The new entry point for swing trading to buy long positions will be if we could go above 207 points, and to short will be if we could go below 204 points. If we take a look at the ETF I've shown you to trade this bullish cycle that we had, most of them are having a big correction. So Euro, for instance, if you bought it here, well, it's retesting its support there. On the NASDAQ, we're back at the same point since the beginning of the rally on March 18. So on TQQQ, it's still at risk. If ever TQQQ goes below 98.43, you have to close that positions. On the TSX, there were some stocks in the energy and the gold sector that started a bullish cycle. I advise you to actually look at HXU. HXU is back at the same point, so it's still a hold as long as it remains above $28. And for the energy sector, it did start a bullish cycle, yes, on March 18. There was also a pursuit of the rally after there was some attacks between Saudi Arabia and Yemen. But since then, though, this tensions that we had between Saudi Arabia and Yemen didn't actually give another boost on the sector. So this bullish cycle that we started on March 18 right now, it's stabilizing. So this is a clear neutral formation in the energy sector. So in terms of the bullish ETF, which is ERX, that allows you to trade the bullish cycle in the energy sector, right now we're staying flat, just like the sector. On the gold, I didn't believe in the bullish cycle that started on March 18 because I saw the correction of the US dollar. I said that it could reach 25.50. It did reach that point, and now it's stabilizing. So we are in a situation where if ever we have a pursuit of the increase of the US dollar, well, it's going to be definitely negative for gold stocks and also negative for the energy sector. So we should definitely monitor that on UUP. However, if UUP goes below 25.38, well, then we might see a pursuit or the beginning of a new bullish cycle on the energy sector or also among gold stocks. Concerning Newmont Mining, it was a breakout I've shown you. I didn't like that breakout. We see right now it just got back within that support, so it didn't perform at all. And we had two stocks that were recommended among marketgurus.tv that you can have access for free for 10 days just by clicking at the link below. And among those stocks, we were able to take some profit on some of them. For instance, NAT, I did show that to you on the March 18 Chronicle. It has since reached more than 5%. So that's a stock where if you bought it, you have to take some profit. It's important. AKS, well, some of you might have been quick to sell that positions when it broke that support. We did it on marketgurus.tv, but since then the stock has rallied since it broke out on March 18. So if you were a little bit more patient, didn't get out of it, well, you have to hold on to it. Don't forget that that's 475. It's the point where you're going to have to trigger a first profit taking opportunity on AK Steel Holding. So far, we got rid of it on marketgurus.tv, but the only stock that we were able to take some profit is NAT on New York that you see on the chart here that has reached right now its former top of 2015. So overall, folks, we actually have markets that are neutral, that lost their upward momentum that started after the FOMC announcement on March 18. This stabilization phase we take, it's important that we remain there within the next few days, and whenever we will get out of this sideways formation on the upside or on the downside, then we'll have the perfect timing to open new positions for swing trading. But right now, for swing traders, the best strategy is to remain on the sidelines. So I wish you all a good weekend. You can always follow us on Facebook and Twitter. And never forget, the more money you make, the happier we are. See you next week.